Good morning. Welcome to the Genghis Weekly Investor Briefing. In this briefing, we unpack the key events in the financial sector for the past week and discuss what to expect in this coming week. And in this week, we have our very own head of research, that is Churchill Ogutu, taking us through the presentation. In support will be Wesley Manambo and Melody Ndanu. And then you have our partner, Mathew Kabeere from FX Pesa, who is going to take us through the global markets. And should you have a question, you can kindly log it in the control panel. There's a Q&A section where your questions will be answered at the end of the presentation. So Churchill, over to you.
Thanks, Dan. Good morning to everyone. So I'll walk you through the macro highlights and get into the fixed income before we finalize on the equity segment. So to kickstart, we'll look at the review of this Kenya Gazette notice that came out last week on Friday. Basically, it was looking at the data as at the end of April for this financial year, looking at the revenue and also the net expenditure highlights. So in terms of ordinary revenue, we are looking at it cumulatively. It's been 1.27 trillion from July up until April this year, of which the tax receipts was at 1.19 trillion, and the non-tax receipts was at 81 billion. So collectively, that's where we are getting our ordinary revenue in the 10 months period. That said, looking at the previous analysis that we did in terms of expectations for the month of April, historically, we've been seeing that in the second quarter, the months of April and June tends to have some outsized tax receipts collection. And if I may put it graphically, like in this 2.5 Men, one of Wesley's all-time favorite sitcoms, whereby you can just put the dwarf guy at the middle of these two people. That is what played out actually. You can think of May, April is that the guy on the right, the dwarf guy is now the May numbers, and then the June is now the other big guy. So we've been seeing, even in the month of April, even what played out from the statistics, we saw a robust increase in tax receipts in the month of April. And to be sure, it was around 153 billion that was collected in the month of April. Of course, on a month-on-month basis, that was 17%. On a year-on-year basis, that was 28%. So it wasn't an out of the norm kind of print for the month of April. Gross domestic borrowing, as at the end of April, was at 729 billion, of which that was an increase of 81.6 billion from the stats that you saw as at the end of March. And this ties to the fact that the IFB that was issued in April was around the amount that was accepted was around 81.9 billion. So that fully went to the gross domestic borrowing. We didn't have a maturity in the month of April, so that's as per the statistics that were given by Treasury. In terms of expenditure, all these items are punching below their weight, be it recurrent at 8.6 billion, development at 258 billion, and also the disbursements to counties at around 240 billion, against prorated disbursements as at this point in time. So that is what stood out in our numbers. If you look at the public debt service costs in the first 10 months, it was around 765 billion, which represented close to 60% of the ordinary revenue that has been collected up until that point. So that summarizes the print that was in the Kenya Gazette last week on Friday. So moving on to our calendar for this week, the only event or the single most important event that we're keeping an eye on this week is now the MPC meeting, which will be on Wednesday. Broadly, our expectation, we expect that the benchmark rate will be retained at 7%. So that's what we'll be keeping an eye. But then again, the following day we'll be hearing from the governor the thought process from the policymakers as to how they arrived at their decision. But from where we sit and looking at the indicators that have been put out there, we likely to see that the benchmark rate will be retained at 7%. That notwithstanding, there's been a delay in publishing and publicizing of some key data. For instance, we still don't have the 2020 growth print, although everyone, or if the conventional wisdom going around is that last year was there was an ugly print that played out just because of COVID-19, and mainly because of the fallout in the second quarter and the third quarter. But in terms of the actual GDP print, I mean, we are clocking down, coming to an end of the 5 months of this year, but yet we haven't seen this print. But we're just waiting for it. And that ties to the 2021 economic survey, which is still delayed. And the other long delayed data is now the unemployment print as at the end of 2020, the last quarter, that is. So let me pivot to the fixed income, looking at the review of last week. In terms of secondary markets, T-bonds went up 5.5%. To 21.6 billion. Most of the trades that were executed were on the infrastructure bonds. The acronym over there is IFBs, and also between medium to long-term papers. That is where we saw most of the activity last week. In terms of the T-bills, we saw that the performance was quite robust, recording an overall performance rate of 162%. We've seen that the T-bills segment has registered a positive uptrend over the last 4 auctions, accumulating to where we are right now. Yields went up across the tenor, and we've in the mainly between the 91-day and 182-day T-bill. For the 264-day T-bill, we've seen that it has started coming off. This is the second consecutive week that the yields on the 264-day tenor have eased slightly. I think it was in the order of 5 basis points. Nonetheless, we are seeing that on a year-to-date basis, the yields on average have gone up by 0.57% from the start of the year levels. Looking at the liquidity trends, just to give us some sentiment or some high-level picture on what is driving the markets. In terms of the interbank activity, we saw that yields edged up close to 0.84% on average over the course of last week to an average of 4.88%. That was the average interbank rate. And that said, CBK's interventions activities were biased towards the mop-up activities, basically assessing the market and looking at how the market is. So they were more inclined to mop up the excess liquidity in the banking sector. And it used what is called the term auction deposits. So that is what was used. Acronym for that is TATS. Bids that were accepted over the course of last week was something in the order of 42 billion at a weighted average rate of 6.516%. Again, if I may take you back to the previous week, whereby the average for the mop-ups was around 4%, we're seeing that even in as much as CBK was mopping up excess liquidity, even this weighted average rate in the mop-ups went up close to 1% to where it was last week at an average of 6.5%. Our calculations or our estimates of net domestic borrowing is in the order of 436 billion. This is just basically borrowing from T-bills and T-bonds. And as a percentage of the revised target in the current financial year, we're saying that it's roughly 81% has already been met as at the end of last week. So our week's trade in the fixed income segment, we're looking at still this buy on the FXD2 2019-15, basically the second 15-year paper that was issued 2 years ago. And coming hot on the heels of the primary auction at the start of this month, and also the tap sale that followed 2 weeks ago. And actually, we are seeing that the value date of the tap sale is today, and then the secondary market of this 15.7 billion will start trading. So we are saying that it will have increased liquidity in the paper. I think the total amount outstanding in this particular paper is around 73 billion, and it's around 3.6% of the overall fixed rate bond segment. So it's quite a high liquid paper. We expect the yield on this paper to continue its decline. At the primary auction, the yield was around 12.975%. And just before the auction, the yield was 12.6775%. So we expect that there could be this gradual decline back to pre-auction levels. And we've seen it playing off. Last week, the yield came off close to 0.11%, or in fixed income jargon, 11 basis points to 12.86%. And we still expect that between 12.7 to 12.75%, it is an attractive entry level into the paper. Remember that this paper is giving a coupon rate of 12.734%. So right now it's trading at a discount. So there's still much scope for an investor who perhaps missed out on the tap sale or in the primary, or somebody just wants to get exposure into a long-term space just to look into this particular paper. So this is a pitch for the week. So at this point, let's just move into the equity segment. We do have, just looking at the indices, NASDAQ was muted over the course of last week. I think at this point, is it cursory relations, this relationship which doesn't tie together, looking at the fact that our head of marketing, Damaris, took leave, and then the NASDAQ just staying muted. I don't know whether this is coincidental or it's something that is not even related, but that's it. That's what played out last week. And NSE 20 share index declining a marginal 0.2% over the course of last week. And at least those improved turnover, close to 4.2% to 3.2 billion over the course of last week. At this point, let me just call upon my colleague Melody just to give us some what played out last week in the banking sector. At least there are some 1Q numbers that came in. So Melody, over to you.
Thank you, Churchill. So looking at the banking industry, the banks are at the tail end of releasing their Q1 results. First, we'll look at Cooperative Bank, which closed at 12.25 with its 52-week high at 12.9 and its 52-week low at 11. It released its results last week, posting a drop of 3.6% in the Q1 net income to 3.46 billion. This can be mainly attributed to increased provisions, which went up a whopping 153.5% year-on-year, which also made its total expenses rise 27% to 9.3 billion. On one hand, the net interest income grew 31% to 9.8 as the bank expanded its loan book, and the non-interest income, however, declined 9% to 4.52 billion on the fee waivers and generally the economic slowdown. So something to note is that the investment in government securities went up to 166 billion, and generally banks are focusing on the risk-free assets, with the interest coming from these securities going up to 4.1 billion, which is 44% increase year-on-year. It's also important to note that the Kingdom Bank, its latest acquisition, emerged from its loss-making position to generate a profit of 127 million. Another bank that posted as well was Absa, which closed at 9.1, which is close to the 52-week high of 9.16. After releasing its results on the 21st, posted 24% increase in its Q1 earnings with a net profit of 2.4 billion. Mostly this was supported by the increase in interest income from loans, as well as an absence of an exceptional cost, which was posted the same period last year. So income from loans increased to 5.9 billion, while non-interest income dropped to 2.9 billion, mainly because of the fee waiver and generally just the economic condition at the moment due to COVID-19. So the bank has recently stated that it wants to invest 1.6 billion in digitalization and automation, with over 60 products to be rolled out during the course of the year. So it also managed its costs better, with a drop in staff costs to 2.3 billion. It had a voluntary exit program last year, and this is attributable to the drop in expenses. It also had a decrease in rental charges to 8.5 million, which is a 64.3% decrease year on year, attributed to the branch rationalization program that it had over the 2 years. Away from the results, also KCB has announced that it plans to acquire 100% of Bank Popular do Rwanda and Bank ABC in Tanzania. And looking at these two banks, it's approximated it would add about 64 billion to the group's balance sheet as at the end of 2021. So this transaction needs to be approved by the shareholders, with the AGM being held on the 27th of May. So I think generally that's what I have from my end on the banking sector. We'll be waiting to see more banks release their results, which we anticipate more loan provision loss due to the current economic condition. Back to you, Churchill.
Thanks, Melody. A couple of things I picked from your presentation is like two worlds. On one side, one bank had increased provisioning, and then the other bank had at least the EPS going faster than expected. Thanks for that. And also the acquisition that you're seeing from the KCB group. Thanks for that. I've seen, I think, scan charts released today, but I know that in the course of the day, they will do some analysis and also will be able to present our earnings notes to investors. So at this juncture, let me just quickly look at the FP, foreign participation activity. Last week, it jumped to 57.5%. With an overall net outflows of 1.6 billion, accumulating activities on EABL equity, exiting on the banks, KCB Group and Stanbic Holdings, and it was the overall net outflows was impacted by Safaricom. So at this juncture, Wesley, I don't know whether you have some thoughts on SCOM, what's your expectation on the direction that investors should look out for in line of the weekend's announcement?
Good morning to you. On Saturday, we learned that the Safaricom-led consortium won the Ethiopian telecommunication license after submitting a bid of $850 million. We expect some excitement through the week on the counter, on the backdrop of this announcement. But on a long-term growth view, we await Safaricom's strategy on the entry and its capital expenditure in a long-term perspective that will be a driver to a solid trajectory on the price action. Back to you, Sam.
Thanks, Wes. Number of, I don't know whether at these levels, because we saw Safaricom hitting highs of 41, close to 42 a couple of weeks back. And then after the results, it started to ease off. I don't know whether already the market had priced in this Ethiopia announcement. That's something to watch out for. So it's still a wait and see, just to see whether, but we expect some reaction in today's session from 8 minutes time. Thanks for that, Wesley. So let me quickly move to the other bits where the NSE sits against its African peers. In terms of the price to earnings ratio, the Nairobi Securities Exchange All Share Index is around 12.6 multiple against a median of 10.9 multiple. The dividend yield is slightly lower at 2.2% against an African medium, at least the peers that we track, which is at around 5.2%. Moving on to the corporate calendar, this is the dividend tomorrow, a book closure date on BOC Kenya, 4 shillings 15 cents. Jubilee on Wednesday, 8 shillings final dividend. And then next week on Monday, we have Kapozi for 18 shillings final dividend. The rest will play out start of next month and also towards the end of next month, and then the month of July. So moving on to our trading ideas for the week. Before we go there, I think there's in terms of corporate announcements, there's also the rights issue that is playing out. There's Crown Paints announcing a rights issue. They want to realize 711 million out of this rights issue. There's an announcement that came out last week in terms of the calendar or timelines of events towards this rights issue. We also have Transcentury signaling an increase of 2 billion additional shares, and then they'll issue a rights issue. They'll now these additional shares will be used to have a rights issue, which will be the subject of the AGM around 10th of June. So that's something that's also worthwhile for investors to keep an eye on. So in terms of the trading ideas for the week, we still maintain our long-term bias towards those stocks that can be able to ride the storm. We're still not yet out of COVID-19 pandemic. So just to maintain exposure to those stocks that can be able to weather this storm. We still have, specifically for this week, we have value trade on Kengen. We saw the counter hitting historic lows over the course of last week. I think it went to 3 shillings and 5 cents before bouncing back, closing the week at 4 shillings and 1 cent. Here we see value trade on Kengen from the fact that our target price for the year is 7 shillings 11 cents. So we are looking at an upside of 7%. This will be driven by capacity enhancement initiatives, revenue diversification, although the flip to this investment thesis is the single buyer risk, because Kengen is tied to the hip of Kenya Power, and that's the major risk that perhaps you think that even the market is punishing Kengen. That said, Kenya Power a couple of weeks back opened up a tender so that they can be able to restructure some of the loans that it has, and also the discussions that National Treasury has with the IMF. They were really specific that they want to look at those quote-unquote state-owned entities that are loss-making, and Kenya Power, alongside Kenya Airways, which are somehow listed entities, despite the fact that Kenya Airways is currently suspended, we think that there'll be major beneficiary out of this restructuring. And we think that based on that, we still haven't seen the details from Treasury, but just based on these prospects of trying to find a way to resuscitate Kenya Power, it will be beneficial to Kengen in the long term. So for Kengen, it's a long-term play, attractive entry levels at this point, based on those based on our investment case on the utility firm. So that's it from our end. So let me just stop there and invite Mathew to walk us through the global market.
All right, thank you so much, Churchill, and good morning, everyone. Welcome to, let me once more welcome you. I know Daniel did a good job to welcome all of you here. So let's look into the global markets, see what opportunities we have. A little bit, I'm sharing my screen. Right. You must be all seeing my screen now. And in the global markets, looking at what has been happening last week, the Fed minutes drops the first hint of thinking about tapering or trying to ease on the quantitative measures that they had on supporting the economy. That one, of course, has got a statement, has got some meaning to the trading in terms of trying to reduce the supply of the currency and trying to strengthen it a little bit. So major US stocks indices slipped last week, of course, amid concerns of rising inflation. Because of course, for stocks, yes, inflation supports it, but sometimes when it increases, just like I was explaining last week, for the stocks, when inflation increases at a time when we're coming from the tough times with the pandemic. Of course, at the beginning, it was like economy getting support to rise up. And of course, with the quantitative easing that was supporting the stocks, then of course, investors were getting some incentives to get in and get some profits out of it, some good positions. But of course, now as if the investors view that inflation is heating up, then it means it has an effect on their earnings, right? Because there was the erosion effect that inflation has on earnings all across. So that one means that now panic sets in. So that's why you see that major US stock indices, because of the rising inflation concerns, it slipped across the indices. So something else, manufacturing and services growth accelerated in Britain. That is the PMIs that were coming up. Remember, it was quite heavy last week on Friday, especially. So Britain, Europe, that's the Eurozone, US, and of course, it accelerated because of the lifting of the lockdowns, especially in the Europe and even UK, and return of many companies and factories to reopen. That one was for last week. Also on the digital currencies, of course, there was a sell-off on the Bitcoin. A lot has been happening on that space. Chinese government trying to clamp down on cryptocurrencies as they are looking forward to bring up their own. Yeah, though they have not even released the name of their how they will call their coin. Of course, we had other news about Elon Musk again insinuating that the ways or the approaches of mining Bitcoin is like not really friendly to the environment. Yeah, maybe carbon emissions, something like that. And these are all things that were able to cause a panic in the market and the pullback in the digital currencies. That's what we had last week. So what are the key highlights for this week? Of course, inflation is far from over, and the US economy will remain in focus this week, looking at the first quarter GDP. And currently it is expected to rise to 6.5 from 4.1, which was registered in the first quarter. And that's what the growth outlook there. Of course, the growth outlook is supporting the economy, yes, the recovery, and it still adds to the worry of inflation, right? So still inflation is at the focus. So we have again PCE, that is a personal consumption expenditure. It's predicted to be 2.4, up from 1.8, which was given in March. So high inflation would prompt central banks to try to tighten their monetary policies sooner than anticipated, especially at a time like now when they have like given a hint that they might start to think of thinking about the interest rates, or maybe trying to tighten up a little bit of their monetary policy. And that's what means probably they might not want to, they may not touch on the interest rate, but maybe touch on the purchases, which are quite loud. Traders will be paying close attention to the growth and inflation readings, and any indication of US rebounding too much too quickly, of course, it's going to spark worries about inflation, and that might make the Fed start to consider tapering their asset purchase program. Something about the PCE. Remember, when you're looking at the inflation, you look at the CPIs, the consumer CPIs, right? And the PCE, personal consumption expenditure, right? So the US government considers or prefers to use the PCE in terms of measuring the inflation. So this reading will be quite important this time around. Right, so in the calendars, of course, you can check out on your favorite calendar, but these are the main things that we've pulled out there. Of course, the main events, the higher impact events and the medium impact events are likely to affect or to give some hint on where volatility might be in the market. So today we have the Bank of Japan, that one must have happened already, and holidays in Europe, bank holidays in Europe and Canada, well, might not be quite moving. Of course, holidays will come with low volatility and low activity in the market, especially for the currencies which are directly linked to those economies. On Tuesday, German IFO business climate, consumer confidence, right? Those are interviews and surveys that will give an idea of how the populace or the citizens are looking into the economy and the recovery. Of course, likely to give some strength or how the economy is progressing. On Wednesday, the Bank of New Zealand, right? Official cash rate, the interest rates, monetary policy statements, and then you have the crude oil inventories for the enthusiasts of US oil. Okay. On Thursday, we have the preliminary GDPs quarterly for the US. That's where what I was talking about is going to give a direction on where the growth of the economy, and of course, to signal whether there is still growth happening too quickly to still add on to the worries of inflation. Durable goods, spending, home sales, all that. So that is going to be quite, it's likely to give a little bit higher volatility on the US dollar paired instruments there. Friday still US. So as from Thursday to Friday, you can see we have got quite some events coming up for the US dollar. So traders can look out for opportunities during those days, especially return to the news. So you can check out your most preferred calendar, of course, economic calendar outside there, and note those days for hints on where you might find volatility. So the preferred or our choice products to watch this week on the stock market, especially the indices, looking at the UT 100, that is the NASDAQ. And this is an index which is quite heavy on tech sector of the US. You can see, I pulled this chart from the weekly, right? On the weekly, and you realize it's on an upward channel. Currently, it's got some support at 12,900 level. So if it holds above that level, then it's likely to keep on playing around that upward channel, and it gets that support. Which you can see it's just above the fast moving average of, I use 20 moving average, EMA. So it's just above 20 EMA. It got some support there. So it's likely, if it gets support there, likely to go and test the areas of 14,000. And if it defeats that level, then you're looking up to the upwards of 14,750. And that will be quite a move, all right? But if still we continue to see more rebound, then of course the upside will not be limited, right? Maybe along that that upper channel, that upper line of the channel. So you can see currently there was the pullback I was talking about, and a little bit of sell-off, right? You can see the oscillators just getting, for example, the RSI getting from the overbought level. That's on a weekly, right? Momentum a little bit around the 100. So it just goes back above 100. Then of course, RSI maintains above 50, and strong support around that 20 moving average around 12,900. Then of course, it's a bias for bullish movement. Right, gold is another potential financial instrument we're looking at this week. Right, remember gold rises with worries of inflation because it's a hedge against inflation. So looking at that chart there, it's a daily chart. You can see, of course, it has maintained an upward trajectory and got some support around, since it got some support around 1815, it has already surpassed the 1850 level. Moving averages are just below it. The price is playing above. So the oscillator is still showing some strong bullish momentum. So the key levels we're looking at here for gold, it's 1850. So that if that instrument maintains above 1850, then we might see some range between 1875 to 1890, and in that level, if it's able to break above the 1900s, then traders are likely to target the 1960s, right? The 1960s and upwards, maybe 1910. Let me talk of in the near term. If it breaks above if it's able to defeat the 1875, 1890 level, breaks above the 1900, then of course we're looking forward to some short-term opportunities all the way to 1911. And if it breaks above the 1911, that's when you might have the traders targeting all the way to 1960s, and maybe to test the highs of checking out their August 2020. So of course, for gold, remember it's a hedge for inflation. So whenever we have inflation heating up, especially for the US, then it's good for the gold. But if something about tampering the purchases comes up, then we might have the gold retreating all the way back, maybe getting below the moving average, below the 1850s, and all the way down to maybe 1800s and 1765, the previous key levels that we had. So long as we have the worries about inflation, then of course we might have those upward trajectory maintained and above those technical levels. So make sure to watch the technical levels for to confirm your trades moving forward. So moving on to stocks. Of course, remember, we always look at the events coming up. Stocks are highly fundamentals. Even if you have to use the technicals, of course, you have to be very much aware of the fundamentals. This is what Churchill and Wesley and Melody and Jenny, that's what we keep on informing the traders all along. It's the fundamentals. That's what directs towards the long term of the stocks. So on my end, these are the few companies which have earnings, right? On Tuesday, Wednesday, Thursday, you can always check out and pick out, wait for the news and see what happens, and you can get some opportunities. Always for the stocks, most of the times, pullbacks are very much are not something you can very much rely on. Yes, of course, you can get trades on pullback. That's selling or short selling, right? But most of the times, it's always good to wait for a small dip and then get an opportunity to buy, right? Because selling off, most of the times you might suffer from squeeze when the traders are trying to cover up on whatever they've borrowed in the short sell events. For the dividends, there we have companies lined up to announce their dividends Monday, Tuesday, Wednesday, Thursday, Friday. You can watch out for that one. And it's good to understand what happens when dividends are announced, right? And when they are paid up, right? Something happens there. For example, when they are announced, then you have the stock price rising by almost the same amount that they have been announced. And then after they have been paid, then it pulls back, right? So make sure you understand how these fundamentals affect the movement of the stocks for you to trade successfully. But they are quite very important. So before you start your week, make sure you understand the fundamentals, what's happening outside there, affecting various financial instruments. And then based on that, you can go back to your technicals, and at least you're able to get a higher probability on the positions you take. And that's my bit for today. Over to you, Daniel.
Thank you very much, Mathew and Melody and Churchill, and also Wesley. You can send in your questions via the Q&A section. And Mahir Bundia has raised his hand. I don't know whether he wants to talk. Mahir, I've allowed you to maybe ask your question live. Okay, seems he's not maybe active. Yeah, Safaricom hit a high of this is Churchill Ogutu or telling the panelists. Safaricom hit a high of 43 shillings and 45 cents already. So the rally is on. We'll be keen to see how it will perform this coming week. And Churchill, I don't know whether you have more insights about that, and also maybe if we can compare it to our playbook where we are currently. Maybe it's good. Maybe if we can give our panelists, our participants, an update of that.
Thanks, Dan. So the price actually at 43.45. That's the 10% increase from the close of Friday. I think that's the maximum. I don't know whether it could bounce.
We seem to have lost Churchill. Maybe Melody or Wesley support. Yes. Yeah, you're back. You're back, Churchill. We had lost you for a bit.
Oh, okay, sorry, I don't know where you lost me at, but I was just talking about the pricing at 10%. Any day, this upswing or downswing is just capped at 10%. That's what we've seen at 43.45. So in regards to our playbook pricing, which we're looking at, obviously we hadn't even factored in this Ethiopia announcement. So currently we're reviewing it, but our pricing is at 32.97 thereabout. So, but it's currently on review, just to bring it out to our participants. But nonetheless, there's been a bit of some announcements from Safaricom, or there's been lots of stories on Safaricom. And one of the things that even caught our eyes was this announcement that came out from Vodacom. Because if you look at the shareholding structure of Safaricom, Vodafone Kenya is at 40% stake, and then we have GOK at 35%, and then the rest of us at 25%. Rest of us is now retail, institutional clients. So for Vodafone Kenya, you find that Vodacom, which is now based in SA, accounts for, it's roughly 87.5, has 87.5% stake in Vodafone Kenya. So that makes Vodacom having a 35% stake in Safaricom, similar to GOK, Government of Kenya. So there were some comments that this made in terms of
it's like we lost Churchill again.
Bundling Safaricom telco company.
We seem to be losing Churchill in the middle of his Churchill, can you hear us? Okay, he's dropped off. We have one other participant who wants to ask a question live. I don't know whether he is ready. Anthony Sure, kindly respond. Yes. While we are at that, Richard Mwangi is asking any information as to why Centum is on a steady decline.
Wes, you can comment on the Centum question.
Thank you for the question. For Centum has been on a steady decline, but the decline is not based on any tangible information from the books. We are still awaiting for the results to come out so that we can see where its price action trajectory will lie towards. All these are just reactions to news, and they are short bid. We are waiting for the books and the results to know. Thank you.
Okay, thank you very much. Anthony Sure, you can ask your question.
Yes, thank you this time for getting my name right. My question is about the Absa New Gold ETF. I've noticed it barely moves relative to spot gold prices. Do you happen to know why this is the reason? Because for the whole of April, it was around 1855 and it only moved at the beginning of this month.
Okay, maybe Churchill can, you could speak on that, Churchill?
Thanks, Anthony. Ideally, there should be like a lockstep price action between Absa Gold ETF and the gold, what Mathew walked us through, XAU, that is ticker name. I'll have to look into that because I hadn't even keenly paid attention to the Absa Gold movement vis-a-vis the gold, but I'll look at it and then can be able to correspond to comprehensively answer Anthony. But ideally, it should be moving, even as per your sentiments, in lockstep towards how gold is moving.
Okay, thank you very much, Churchill. I think there is no other question currently active. So I'd like to thank all of you for carving out your time to attend today's session. And I'd also like to thank our panelists, that is Churchill, Mathew, Melody, and Wesley. Thank you very much for also presenting this very informative knowledge to our participants. So should you want to trade, should it be local stocks or global stocks, you can maybe download our application called Jikuze, which will enable you to invest in the local stocks. And then through our partners, that is FX Pesa, you can also download their application and participate in the global stocks. So I think we can close it there. So have a good week and happy investing.
Bye, everyone. Have a good week ahead.